It's about that time of day again. My name is Joseph. Monday evening, November 19th. Welcome back to your nightly newsletter. My job is to help new traders just like you earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in my trade room. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish with a short covering rally. And like most profit-taking rallies, there was one big thing missing from today's run higher, and that's the big clue going to Tuesday morning session. The S&P is bearish into a trading range this evening, and that tells me to stay patient and fade those breakouts using that two-try failure pattern tomorrow morning. Nasdaq is also bearish with a strong move lower as well. But the way the price action felt today tells me pretty much all I need to know the best plan of attack for tomorrow morning. Gold is bullish, but the way we finished today's session tells me to expect a range tomorrow morning. So the plan is to wait for a pullback, and I'm looking for buying opportunities. Going to use that two-try failure off the lows. How about the euro? The euro is bullish with a strong run higher, and with two major targets just a few points higher tonight. My goal tomorrow is to get long just below that moving average, and I'm watching for those seller failures, so beware trying to call the reversal. Well, we're back in the action once again with a short holiday week of trading ahead of us here this week. And with the holiday on Thursday, tomorrow, Tuesday, quickly becomes the last full session of the week, which means there's a sense of urgency this week for traders, and that means we're expecting a lot of great volume and probably some great opportunities on Tuesday morning. Speaking of Tuesday, I've got a great newsletter for you guys and gals tonight. Got plenty of reliable trading opportunities setting up for tomorrow. But before we jump in and put the plan together for tomorrow morning's session, I want to remind you, if you're watching me this evening on my YouTube channel, you can read all the details of today's trading plan by reading the full text, which is located right here on my blog at Sideways Markets. I'll leave the link in the description of this video. Also, if you have any questions about anything covered in this video tonight, please post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and when you do, hit the bell icon so you get notified every time I post another video. And of course, if your goal is to become a consistently profitable trader, make sure you join our mailing list right at the top here at Sideways Markets. You can also download all the charts from tonight's video. They're available for download. If you're on the blog, there's a button right below the video tonight to grab all those charts. And don't forget to call us anytime, toll-free, 800-381-2084 in the upper right-hand corner. Call that toll-free number. Use that live support tool if you have any questions about anything we talk about. I'm always standing by to help answer those questions. All right, let's jump right in. Got a lot to cover here tonight. First things first, though, what's the schedule here for tomorrow? And most importantly, what's the schedule here for this week? Because this is it's kind of a weird week, and we talked about this today in our trade room. Of course, we're done with Monday. Tomorrow, of course, is we're planning for here right now. But real quickly, though, right, Thursday is the holiday, right? Now, markets will be open in Europe, but with this being a major holiday in the U.S., everything is going to be very, very quiet. Even if the markets you're trading are open, you'll want to be very, very careful on Thursday just because it is a holiday. Now, in my experience, the holiday on Thursday, Wednesday is very much a travel day, right? Travel day, and of course Thursday, right, is the the L-tryptophan recovery day, right? It's Black Friday, right? It's the Friday after. Right? It's the recovery day. It's the comatose, right? It's the food coma day. The day after Thanksgiving, right? Or the clean up the leftovers day if you're in my house, right? Hide all the evidence day. So we got travel day on Wednesday, holidays on Thursday. Friday is, I hate the term Black Friday, right? But it's basically kind of the recovery day. We have markets are closed on Thursday, and you've got an early close on Friday. So really tomorrow in my eyes, is the last full day of the week. We were expecting today to be a pretty busy day. It definitely was. Tomorrow is really, in my opinion, you've got that travel day tomorrow. On Wednesday. I would imagine Wednesday's probably going to be a half day. It's got a full day open, right? It's a regular session, but everything's crammed in. All the news is crammed into Wednesday. So Wednesday, you've almost got to assume Wednesday's going to be a loss, or not a loss, but you have to assume Wednesday is going to be a little bit of a tough day because people are going to be rushing in, rushing out. I would imagine Wednesday is probably going to feel the same whether you're standing in an airport or whether you're trying to trade the markets on Wednesday. So when I look at this, we got the chaos travel day on Wednesday. We got the holiday where we're closed on Thursday, and then of course you got the recovery day, right? The L-tryptophan coma day on Friday, and there's an early close on Friday. So half day, right? Half day on Wednesday and Friday, closed. Yeah, so the only full day we have here is Tuesday, right? So tomorrow's that full day, the last full day of the week. I'm going to be out of the office. I'm traveling on Wednesday, right? I'll be hitting the airport on Wednesday. I'll be out on Thursday, right? And of course, out on Friday. So there'll be no newsletter Wednesday, Thursday, Friday. Tomorrow night, we'll trade tomorrow morning. I'll do the newsletter for Wednesday morning, but I'm going to be out of here early on Wednesday morning for my travel day, right? So a lot of people are going to be traveling Wednesday, eating on Thursday, recovering on Friday. Tomorrow's our day, right? Tomorrow's our day. So now you know what's going on. Again, there's a full day on Wednesday, right? Wednesday is technically open. We're closed on Thursday. And then, of course, right, Friday's that half day. I'd be very careful. Be very careful. Be early on Wednesday, early on Friday. Take the day off on Thursday. I wouldn't even recommend. Even if you're trading a market that is open on Thursday, I wouldn't recommend it. So we've really got to get this thing going tomorrow, right? Tomorrow's our day. Now, we open up our trade room at 8 o'clock every morning, Monday through Friday. We'll be closed Wednesday, Thursday, Friday for the holiday this week. And really the only news we have tomorrow is that housing starts. Just today, we heard from the major home builders who said they had been overstating their optimism for the housing market. Not good, right? Not good. That pretty much, I don't want to say pegs this thing, but we're probably going to see a pretty disappointing number tomorrow for housing starts. I mean, I can't think of any other reason why home builders, right, publicly traded companies would risk putting egg on their face, right, and not be right about that. So we definitely heard a bit of a leading indicator today from the Home Builders Association saying we may have been a little bit too bullish on this housing market. We've been talking about it for a while now here, right? We've seen the writing on the wall, the housing market, right, pulling back on us right now. Mortgage applications have dropped. So we're expecting to see a relatively cool housing starts tomorrow. Now, as you can imagine, housing starts are going to be a huge punch in the gut. We've seen bearishness on the equity markets right now, bearishness on the oil. When I think housing, I mean, where do we begin? Right? All the raw materials. I mean, housing is it has its tentacles and everything. So the reason why we watch housing numbers, right, are because it'll affect oil, it'll affect the E-minis, and by default, right, affect the interpretation of the dollar, which will affect currencies and gold. So you can expect everything tomorrow to really get a good shot in the arm at 8:30 Eastern time with those housing starts. Other than that, there's no real major news tomorrow. All the news you can see is pretty much piled in here on Wednesday. That's why I said earlier, Wednesday is going to feel like whether you're trading or standing in an airport, it's going to feel really busy on Wednesday. So if you do plan on trading Wednesday, and I'll talk more about this tomorrow night, we'll go over the plan for Wednesday's session. So let's keep moving here for now. But full session tomorrow, 8 o'clock Eastern time. And remember, the goal of the plan tonight is to get us ready for tomorrow morning. And don't forget, we're going to trade this strategy together every morning, 8 o'clock Eastern time. So let's jump right in. I apologize for the lengthy introduction there. I just want to make sure that you guys know what to expect here for this week. I've got crude oil, S&P, Nasdaq, gold, and of course, we'll wrap up tonight on the euro. Crude is bullish with a strong short covering rally to finish today's trading session. And with the strength of this move going higher, we barely saw any deep pullbacks to allow the buyers into this move. So that's where my focus will be tomorrow. And to do that, to get a deep pullback, I have my eyes on the low of this channel, whether it be the low of this obvious channel or the low of this hidden channel. You know me, I really like those hidden channels because they oftentimes, right, are that deep pullback that we're looking for. So I really have my eyes on this sweet spot here, right around the low of this hidden channel, right, the low of that hidden channel, which is right there. And the same time here, right, this reversal line, you'll notice, right, that prior high. You know, I don't usually get too worried about seeing this stuff right here. Usually you want to see some separation off that reversal line, and then you can use it as support, right, after we've kind of broken higher here. So that's an area, this whole area right here, 56.87 to 56, right, 69, that whole area right there. The big clue here is it's a short covering rally. We spent the first half of the day today until about 10 o'clock going lower in a very strong move lower, and then sure enough, turned right around. And the one thing you'll notice is we never really got any deep pullback. So we assumed there'd be lots of buyers waiting down at key support levels. And so my support levels are 87. My support levels are at the low of this channel. So this whole area, right, this whole area here is where I'm looking for that deep pullback. Now, as we go higher here, we have targets, right, at a measured move target. And if we really start getting a little bit crazy here, I've got a runaway target up around that 58 and 26. So put the plan together here for me, Joe. We get a bull market. I want to buy at support. And when I buy at support, that will likely come after a deep pullback. That's what I want. I want to get a deep pullback because we haven't seen a deep pullback yet today for these buyers. So a lot of buyers are probably sitting on the sidelines waiting with their contracts ready to go. All they need to do is get a place to buy so they're not buying too high. So we'd like to get that deep pullback. If we can get that deep pullback, that should take us below the moving average. Once we go below the moving average, then it's pretty easy. I'm looking for that classic two-try failure pattern. If I can get those bears to try once, try twice below the moving average, then I know exactly where their stops are, and I can look to buy right into those stop losses. Now, from there, I can draw a trend line. I can draw a trend line up to those highs, bring it down to that low, and now we have a follow-up pattern. I can look for what I call a hidden channel pullback. So if we can get that deep pullback off those highs, we can look for two easy opportunities. A two-try failure pattern. Let those bears try once, right? Let them try twice. Or we can then look for the hidden channel pullback pattern. Wait for the failure to go. Don't chase after that move higher, and then buy the pullback to the channel. Now, another pattern I like to look for, which is relatively rare, but keep your eyes open for this one too, what we call a two-legged pullback. This is where you see a distinct 1-2 legs pullback. That will create this trend line coming down. Then the trend line, of course, acts as resistance at first, but I can use that trend line now as a level of support, right? So again, a couple different options here right now. This one would be what we call the two-legged pullback. You're using that trend line as support instead of resistance, or it's the 1-2 failure pattern, right? The 1-2 failure, right, on that deep pullback. Then what is it? It's the hidden channel. Yeah, you got it. That hidden channel pullback. Okay, so real simple patterns. And we go over these patterns every day in our trade room. We use a checklist to qualify all of these patterns, a very methodical process that we use every day. In fact, if you'd like to see a lot more details about these patterns, I have them included with our free trading course. I'll put a little link up here for you guys. Don't worry, pause the video. I'll put a button on the blog as well here, guys. If you're on the blog, there's a big red button below the video. If you're on the YouTube channel, just hit that link I just posted listed in the upper right-hand corner. Grab that free course. I'll give you a password to get into our members section, and you can watch all those course videos and learn all those patterns. It's a great way to really get a deeper dive into these patterns. So that's an easy way to learn some more here if you guys want to learn more about these entry patterns. What if price doesn't pull back though? Right? I mean, it'd be easy. It's easy if it pulls back. Yeah, pulls back's easy. What if it doesn't pull back though? What if we keep going higher here? Right? What if we keep grinding higher? Well, if we keep grinding higher, we know where we're trying to go. We're trying to get back up, probably trying to get back up to 60 eventually here, right? But let's not get too far ahead of ourselves. I've got that 58.26 to 58.63 area. If we keep pushing higher here, now we know the writing's on the wall. I'm going to move this battle zone up, right? And I'll put it right in here. Right? We'll use that as our battle zone now. And now we're literally looking for the same exact patterns here now, right? Just looking for them at a higher price. That's all we're doing. So if we keep on grinding higher here, I'm still going to look for, right? If this thing just keeps on grinding higher, I'm still going to look for that deep pullback. I'm still going to look for, right, that two-try failure into that hidden channel pullback. We're still going to look for the same stuff here. Right? There's one more thing you want to keep in mind too. If we start aggressively going higher, right? And you'll know it. There'll be this sense of urgency to it. If we don't get any real pullbacks, if it's just aggressively here running higher, then we know it's time to break out the aggressive patterns, which are traps. So if it starts really running here in the short term, right, if we're starting to see this thing really push higher here and it feels like we're going to miss out on this, look for those traps. Those traps will be another easy way to do it. And then one more thing, what would a range look like? This might be a range. In all reality, we're right back to the beginning of the day today. We're right back where the day began pretty much, right? What if we start seeing it go sideways here? Then what do? What if it starts going sideways, it chops around, double tops, double bottoms, right? Moving average starts flattening out. Then what do? Right? Then we switch our plan to a two-try failure below the low of the range, right? So we look below the low of the range, and then we look for that one try, that two try, that failure pattern. And again, if you grab that free trading course, which I talked about earlier, you'll see hundreds of examples of these range-bound, right, kind of breakout failures. We let those bears try to break out once, right? Let them try once, let them try twice, and then we'll buy up into their failure. All right, guys? So that's the plan here for the bulls, no matter what we get here. How do we turn bearish? What does a reversal look like? Whenever a market's bullish, it takes what I call the 1, 2, 3 reversal, right? The 1, 2, 3 reversal is 1, a strong move against the current trend. 2 is a pullback to the moving average. And 3 is a strong move lower, in this case, off the moving average, right? It's 1, 2, 3. Okay, now a lot of people, what happens is they try to sell this pullback right there. Right? They try to get it too aggressive with it. A strong move down is not enough to call a reversal. Not in the bull market, it isn't. So what happens is if you try to sell that first pullback, this is where guys like me are going to come in and try to buy into your stop. Right? We'll try to purposely buy right into your stop because it's not a bear market. But if those sellers are successful, and in all reality, what's really happening is the buyers are simply walking away. It's not the sellers who are successful, it's the buyers who just simply don't want it anymore. If they allow that to go lower now mark up that low, and we'll find that new channel, and we're trying to sell right off that channel high. Where's my target? My target now will be down at the low, right, of that range at 55.29. So a relatively easy plan there on the oil here this morning, or tonight. We're ready for tomorrow morning. Again, trade room opens up 8 o'clock Eastern time, and we have a plan to follow. Next up, how about some S&P? S&P is bearish as price collapsed off last Friday's high, and that finishing today's session in what looks to be a range. Now, ranges are pretty easy to trade, especially if you have the right plan. We have a bear bias telling me now to look for, right, bear bias, price goes lower into that trading range. that tells me look above the range here and look to sell above the range, right? That's what a bear bias into a range tells me. It also tells me the entry pattern I'd like to use is we call the two try failure pattern. And much like the name sounds, it's got two tries for the buyers. So we'll wait for the buyers to go up. We'll wait for the pull back. We'll wait for them to try twice. And then we'll look for that sell going back down in, right? Let those buyers try once. Let them try twice. Once we see that second attempt start to fumble, now we can look for that sell, right, going back down in. So the problem is you don't want to try to fade the first breakout, because a lot of times if you try to sell this first breakout, your stop goes right above the high, and it will come out and stop you out just to watch it collapse back down. So I try not to get too aggressive and sell that first move, because oftentimes you'll just get stopped out there by a few ticks just to watch the suckers tumble back down. There's nothing worse than that, right? There's nothing worse than getting stopped out of a good trade. Well, I guess it wasn't that good of a trade, right? Or else you would have been able to stay in the trade. But there's nothing worse than being right about the idea, just not being right about the entry timing. If you remember a few weeks ago, I talked about opening an ice cream stand in January and how you can have the best ice cream, but if you don't time your opening weekend right, you're not going to sell any ice cream in January. You open up that ice cream stand in July or August, and you will have a hard time keeping people away. It'll be very, very busy. So timing is everything in any business. The same thing is true for day trading. So I want to go up one try. I want to go down up twice and then back down again. Now remember, this two try rule, this two try failure pattern, there are a lot of variations to this, right? There's the nested two try, right? There is the 1-2 try, right? There's the 1 and then 2 from there. So there's lots of different variations of these two tries. I have most of them covered in that free trading course. So I would definitely recommend you take a look at that free class. And of course, don't forget, we're going to trade those variations together every day in our trade room. 1 try, 2 try, back down. Now, how do we buy the low here? What if price comes down? Then what do we do there? If it goes higher, this is easy. 1 try, 2 try, back up. Can we buy off that low? Not my cup of tea. You could. It's very aggressive because the market is bearish. So if we do go lower, what I'll look for what I call a nested 2 try, which basically has a strong move down followed by the bears trying once, bears trying twice, and then I'll buy it back up from there, right? Let those bears try once, let those bears try twice, right? You can see it right here, right? Move down, 1, 2, and then up, right? Move down, 1, 2, and then up, right? The key here is letting those, again, it's a range, so we're using the 2 try rule, right? Very, very important during ranges. Let those bears try twice to finish off that second leg, right? Or overhead, let the bulls try twice and then sell into their failure. Don't forget, if we sit right inside this range, you're going to sit right on those hands and do nothing. I don't want to mess with the middle of the range. I'll wait for it to go up, let it pull back, try again, sell it back down, or try to go lower, right? 1, 2, back up again, right? Those are our patterns to fade those breakouts. Now, what does a reversal look like? How would a market break out of this range? Well, we talked about that 1, 2, 3 reversal on the oil. What does it look like here now? It would be a strong move up, a pullback to the moving average, yep, and then a strong move through, right? That strong move through, that's the proof. That's the proof this market, right, is now bullish. Now, this could go in both directions in all reality, but the easy one will be if it rallies higher here, then what we'll do is we'll mark up that prior swing. We'll mark up that new channel, and now what I'm looking for here is to get that pullback, right? That pullback is where the money is, right? Get that pullback, and then from there, if we can buy, again, kind of that, it's that prior swing down to the low of that channel, targets up around 27.5. There's a big, big bullseye up around that 27 50 area if these buyers, right, can take this thing lower. Now, as far as going lower, be very careful here as we try to go lower. I'd much rather be a buyer right now if we do break out of this range than try to be a seller. Because look left and that 2671 area, ooh, right? The prior month low, pretty much the monthly low is at 2671, right? Now, the prior month low is all the way down. Wait for it. Yep. All the way down at 2603. So if we can get through this low tomorrow, there is a ton of opportunity now down to that 260, we'll call it 2603 area, which is basically October's low. Remember that big kind of flash crash we saw, right? Those couple days at the end of the month of October. So if we can break down, but I'll tell you, I'm very, very concerned about this going lower, getting stuck around that low, and then 1, 2 back up in, right? That's what I'll be looking for tomorrow. However, if we can see them hold that run, yeah, now we're talking. Now we're talking. If they can hold that second leg, then we'll go out, we'll find that new channel, and we'll focus on selling the top of that channel and using our measured moves for our targets. So relatively simple idea if price goes up, but if price goes down below that range, I'm looking to fade that breakout because of the range, and I'm very, very cautious about trying to sell as we go lower. Let's keep going. Speaking of lower, look at that Nasdaq today. Boy, the FANG stocks, right? Facebook making headlines here tonight, just getting crushed here today. The Nasdaq is obviously bearish with a bleeder, right? A sleepwalker, a zombie tumbling lower today, whichever adjective you want to use to describe it. And that's the big clue into tomorrow's session. You know, we talked about this a bit on oil. Anytime I see a market move like this, what do I mean? Without any real deep pullbacks, right? I mean, if you were waiting for a deep pullback, you got crumbs today, right? You got crumbs, right? You were tossed the leftover bones, right? The dogs were fighting over this stuff today. There was no deep pullbacks to sell into, right? Most of the time, a good liquid market will go down, it'll rotate, down, rotate, and we have sellers selling into these moves because that's where they make their money, right? They sell high in that bear market. So when I see a market that barely has, right, barely has any pullbacks, I know there are going to be a lot of sellers waiting overhead because they're still waiting from earlier today. Right? Not everybody gets aggressive, right? Most experienced traders have learned that it's not a race, it's a marathon, and we've got to preserve our capital. So a lot of people are waiting up here for the sell. They're waiting up here for the sell. They never got it. So now at this point now, we're expecting some sort of correction. We're hoping for some correction here. We're hoping it doesn't keep bleeding lower. The Nasdaq is in a very similar situation, right, as the S&P is as well, right? If we keep going lower here in the Nasdaq, we're now running right into that end of October, right, low, down to that 68.51 here. So there's not a lot of space left, right, for us to keep going without some sort of relief, right, off of this low. So bottom line is we know we're bearish. There's no question about that. Anytime I'm bearish, I want to sell at a major level of resistance. Where is my resistance here? My resistance at this point, I love that reversal line at 23 3/4. That would be my dream come true tomorrow. But in all reality, we have this trading range. If I take that trading range and I take the size of that range and just copy and paste it higher, right, it gives me that resistance right here at 37. If I copy and paste it lower, it gives me support at 12.5. Now, the support levels are great, but what we really want are those resistance levels. And so you can see why, it's pretty obvious why I've marked up the 23 to that 37 area as my battle zone, because that's the overlap of that reversal line along with, right, the top of that range expansion, right? Range expansion up, range expansion down. So we have an easy idea now of where we have some resistance. Now, what will the patterns look like? Well, again, as I mentioned on the S&P, whenever we're range bound, we start using that two try failure pattern. In other words, as we go higher, nice strong break higher, I don't want to sell that first try, because a lot of times what will happen is it'll pull back and then run you out just to come collapsing back down. So I tend to be more conservative personally. You're more than welcome to be more aggressive. But, you know, the old saying, right? Pigs get slaughtered, you know, stuff like that. Not a very pleasant term, but it is what happens. You get aggressive on this stuff too often. Not every day is going to be a strong trend like this. And you've got to be finding a strategy that works in all market conditions. And I find this strategy works in pretty much everything. But the bottom line, though, is one try, two try, right, and then back down in. Now remember, there are a lot of variations to this, right? There could be the strong move, the nested two try, right? There could be the up, the strong, right, and then back down, right, with a higher high there. Or there could be that double top two try. We have a breakdown of all of these two try patterns in our trade room. We'll go through that checklist, right, tomorrow morning, and we'll just use that checklist together, right, to make sure we do it all the right way, right? So if you're a client of mine, obviously we'll go that tomorrow morning. If you're not a client of mine, you can learn a lot more about these patterns as part of that free course. It's right below the video tonight, right? It's also linked up in that information icon in the upper right hand corner. So it's very similar here. We talked about the S&P. I want to see us go up one try, two try, and then back down. If we go lower here, right, strong move down, be careful. You've got that major support down there. So I'm looking to fade this move, to be honest with you, but I'm not just going to buy it as it goes lower. I'm going to wait for those sellers to try once, let them try again. Once those bears now have a once, right, and they've got twice, yeah, now usually what will happen is we'll get that nice strong signal, right? We can get that buying going on back up into that range. And I'll tell you, that could lead to a massive short covering rally. Those patterns oftentimes do. So I will always try to leave a portion of my trade open as a runner. And again, we'll go over more of those details with you guys tomorrow morning in the trade room. So it's pretty easy. If we go lower, strong move down, one, two, right? Nested two try, up, one, two, back down again. If we see us go sideways inside the range, we are going to execute the sit on hands part of our strategy. I'm always very quick to point out to you guys that part of our strategy involves a time when we don't trade. I know it seems crazy, but part of every professional strategy are very specific rules of when we do nothing. Right? When do I buy? When do I sell? When do I do nothing? If we're sitting in the middle of the range, our job is to do nothing, right? How many jobs have you had, by the way, where your boss said, Joe, I want you to really work hard at this today, right? Can you help me? I want you to do nothing, right? Could you imagine that? Sign me up for that job. But that will be the job tomorrow if we're sitting in the middle. Do nothing, right? Wait patiently for us to try to break out, right? Try to break out, then we'll wait for the one try, the two try, and sell it back down in. Now, how do we break out? What does reversal look like? A 1, 2, 3 reversal, right? Strength, strong move up, that sets the table. Remember, you can't buy this first pullback because I'm telling you, most of them will come crashing back down. And that's exactly what I want. One try, two try, back into that range. So we got to wait now for that explosive move higher. I know it's not easy to let the market go without you, but there's no reliable way to predict it. Mark up that prior high, mark up the new channel. You got it, right? And now we look for that pullback. This will likely be a very steep channel, so be prepared to look for traps, seller failures. Just make sure it's down at a support level. Wait for it. It will be worth it. If we can get that short covering rally, boy, we have some great targets overhead back at those highs, right, from last week. And this could easily get really good for these buyers tomorrow if, there's a big if right now, if the FANG stocks, if this market can turn this thing around here, right, going into Tuesday's session. So we got a good plan for the E-minis, right? E-minis are locked and loaded for tomorrow morning, 8 o'clock Eastern time in our trade room. Let's grab some metals now, and then we'll wrap up tonight on the currency, on the euro. How about some gold? Gold is bullish, but finishing today's session with a double top of last Friday isn't a big confidence booster for these bulls. So until we see some proof from these buyers, we're left to assume this market is a range. And if so, with a bull move into a range, the goal is whenever I see a double top in a bull market, that typically tells me to shift my focus at the lowest part of the pullback between those two highs. I've got this marked up down around 1220, but this whole area down here is where we're focused on right now for gold. So we get a strong bull move up, pull back, retest the high, clearly a double top at that high. At this point, I'm really looking for one of two scenarios. One is going to be a pullback, so we try to buy the pullback. The second scenario would be confirmation of a move higher, right? And then we can get right back on our horse here and keep looking for additional targets as we go higher here. So there's definitely potential for this, right? There's definitely potential. This might just be a little bit of a head fake here. That may not hold. We may keep going through it. And if that's the case, I've got this channel low. We'll try to use that tomorrow, right, for our key support. So those are pretty much the two main components here right now on this gold. Let's assume first this double top comes tumbling off the highs, right? Let's assume now we have some profit taking off these highs. Let's assume first we pull back, right? As we go lower, you're going to see this pattern over and over again. One try for the bears, two try for the bears, and back up into that range. Right? Maybe you weren't paying attention earlier, right? I call this the two-try failure, right? I'm kidding with you, obviously. Nothing new. We've talked about this pattern. We'll keep talking about it because it's a great pattern. It's a cornerstone using this two-try, right? The two-try failures, the nested two tries, the majors, the minors. There's so many different ways in which we use the two-try pattern every day in our trade room. That's a great example right there. And that's pretty much what we're looking for here tomorrow, right? So look for that pullback. Look for that pullback. Let that moving average come down. Let those bears try to sell that pullback, right? Let them try to sell it. One try now, right? Get them one try. Get them two tries. Make it obvious, right? That was obvious. There were bears selling there, right? Make it obvious. And then once we have that, now we know where their stops are, right? Now we can look to sell into those stops. And then again, don't forget, buy into those stops. I didn't mean to say sell, right? Buy into those stops. That's the first pattern. But then remember, don't chase after it. Okay, it's very tempting. A lot of people do is they'll chase after it, right? If you chase after that move higher after a failure, you're falling right into a trap, right? It's a huge trap. You don't want to. And I know it's counterintuitive, and I know it's natural. It's instinct for us to want to buy as the market goes higher. This is why, in order for me to kind of overcome my instincts, which are not good to trade with, I use a checklist, right? I have a checklist, and we use that checklist every day together in the trade room, and that checklist makes sure that before we take each trade, we check off all those items, right? That way we know I don't want to buy high. I want to find that new channel, right? Find that new channel and buy it at the low, right? Buy that pullback, just like we saw back here, right? One try, two try, back up, find that new channel and buy the pullback, right? Same pattern over and over and over again, right? Don't forget also, if it really runs, don't be afraid to grab that nested 1, 2, back up, right? 1, 2, back up. And what if we go higher here? I think that's the hard part. Obviously, if we sit in the middle, we're going to wait patiently, right? If we sit in the middle, we sit on hands. That is our job. Okay, it's part of the strategy. We're not being lazy. Okay, that's one of the things, right? It's hard because as a human being, we've been conditioned by our culture, by our society, right? Go get it, right? To make money, you've got to do some work. To make money, you've got to put effort in. Right? We don't, it doesn't work like that for day trading, right? To make money, we have to first protect our capital first, then allocate our capital when the timing is right, right? And when is the timing right? In a bull market, we're buying the low of a range. We'll time the entry once we see a second try, right? Or if we see a strong move down, we'll time the entry with a nested two try, right? When is the best time to take your trade? The best time, in my opinion, the best entry timing is right where the opposite side of the market realizes they're wrong. For example, right, if we see this market blast higher, right, let's say it blasts higher here. I hope it does. I don't care what we get. It doesn't matter what we get. We always have a good plan no matter what. If we get this market blasting higher here, then we know it's not a range, right? Get used to being wrong. It's part of the business. I'm calling this a range right now because of this double top. But hey, if we come out here in a few hours and we're seeing this thing push higher here, it's not a double top anymore, right? It's a trend. So in that case, I'm going to find that new channel. I'm going to wait for a pullback. Now, when we pull back, right? When we pull back, get that deep pullback, it's probably going to go below that moving average. The best entries are usually just below the moving average, and you'll begin to love that moving average for that reason. I love the moving average because I know when we get below the moving average in a bull market, I know there are going to be sellers who are going to try to sell it, and I know I can buy and use their stop losses as gunpowder, right? Literally, it's a fuse to light that thing going higher, right? So where are the best entries? What's the best way to time your entries? In my opinion, as long as you're going with the trend, let's say bullish, for example, and we have a support level, right? Combine a support level, such as the low of a channel, right? The top of a prior range. Just find some support, right? I like to use channels. I like to use ranges. I like to use trend lines, right? Find a level of support. And I'll teach you more about that tomorrow in the trade room. We go over it in very extensive detail every day. And then right where I can almost feel the pain from the other side of the market. And it comes with a little bit of experience, right? But where I can start putting myself in the shoes of the sellers and thinking, if those sellers are trapped right now, I want to be buying when they get stopped out. Because what happens is it just flies higher, right? It's a very, very strong move, almost always going right to your first target. So time the entries, go with the momentum of the market, find that level of support, right? And then find that time where the opposite side of the market, right, you can see them struggling and then buy right into their stops. Yeah, at first, it's a little bit easier said than done, but not to worry though. I'll be with you every day like clockwork in my trade room, and I'll show you how to do it, right? It's not difficult. You just need someone to stand there with you and show you what to look for. Just like you learned every skill up until this point, right? Model your actions after somebody who's already been there. All right, let's wrap this thing up here now on the euro. Euro is bullish with a nice strong run higher with a target we assume at this 15,000 big round number, right? And that measured move resistance overhead. The bulls clearly have momentum, so my goal is to combine entry patterns with a level of support. I have my eyes on the low of this, what I call a hidden channel. I told you guys earlier, I like these hidden channels because they allow me to get these deep pullbacks. All of a sudden, the sellers go, ooh, we're bearish. They try to sell, and they get smoked. Good example back here, right? Easy pattern, right? Bull market, below the moving average. Bears try once, bears try twice, right back up again. Right? So now we'll look at the same pattern tomorrow. Strong move up, let them pull back, let those bears try, right? And we can now buy right into those stops, right? And if we get lucky, we can get a double, right? A double whammy here. A two-try failure, right? Bears try once, bears try twice, and then we can look at that strong move up. Again, it'll usually be pretty strong there. Don't chase after that. Find that new channel. You got it. Find that new channel and wait for that pullback and buy it there. Right? It's that two-try failure into that bull channel pullback. Okay, also don't forget too, if we do go sideways here, right? If we start going sideways here, this is the euro, it'll probably finish off that 15,000. So let's just say, for example, we go up and we end up sideways up here. Because that's probably what's going to happen here. I would imagine we're so close to that 15,000, it'll probably just get dragged up there. So if it does go sideways up here, remember, take that trading range, copy and paste it down. That way you know where that support is, right? And then look for that 1, 2, back up, right? Or if we go up, and again, let's just say right here, wherever we see a range, right? Wherever the range happens, it could be here, it could be a little bit higher, doesn't matter, right? If we do see a strong move down, look for that nested 1, 2, right? Let those bears try once, twice, and we'll buy into their stops from there. So again, I'm just waiting for a pullback right now, right? If we keep going higher, we keep waiting, right? Keep waiting for that nice deep pullback. See, if I can wait for a deep pullback, I can risk small to earn large. If I buy right now, I'm risking large to earn small, right? How do you time the best entries? You're going with the momentum, incorporate a level of support, such as low of a channel, right, or reversal line. Incorporate low of support. Try to put yourself in the shoes of the sellers, anticipate where they're going to run into trouble, and literally buy into their failure, right? Buy into that failure. And again, you really are on the right track if you're able to risk small to earn large. In other words, you can take a small amount of risk for the potential to be in going with this momentum move as it goes higher. So again, if it goes higher, wait for the pullback. If it goes sideways, wait for the two-try failure. How do we reverse? It seems almost impossible for this thing to reverse right now, but what would a reversal look like? A reversal would go strong move down, pull back to the moving average, right? That's 1, that's 2, and then 3 is the move off. Then what do we do? Find that low, find that channel. You got it, right? That's my sweet spot right there. I'm looking for that move now back up so I can sell off that high, right? And my targets at that point now, boy, we've had a pretty big run here for that euro. I would imagine if this thing reverses back down, we have this big consolidation area here right around 13,000. So I would imagine 13,000 becomes an easy target here. But make no mistake, guys, we're probably going to find our way up to that 15,000. If you look left, we've spent a lot of time around this 15,000, right? It's been a very active price level pretty much all year here for the euro. So I would expect this thing to continue going higher here. All I'm waiting for now is my chance to get on the bus, right? The bus is rolling. I'm waiting for it to slow down so I can jump on, right, and get a ride right along with the other bulls. All right, guys, don't forget tonight, all we're doing is getting prepped up for tomorrow morning's trading session. We open up tomorrow morning at 8 o'clock Eastern Time. We're going to execute the plan together with all of our advanced members. If you'd like more information on membership, you can learn more on our website. I'll put all the links in the description of the YouTube video. Pick up the phone and call me anytime at that toll-free phone number. I'll be happy to answer all your questions. And don't forget, I talked about that free trading course. It's also included with our free trial. So hook up that free trial, learn the entry patterns, and we'll see you guys tomorrow morning in the trade room. If not, same time, same place, tomorrow night on our final edition of our newsletter for this holiday shortened week. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? Right? This time of the year, be nice to each other, will ya? Right? I'm kidding with you, but obviously, as always, we'll see you guys tomorrow morning, bright and early. If not, come back and join us same time, same place tomorrow evening for our next edition of our nightly newsletter. Guys, be well out there. Adios, amigos. Bye-bye for now.